Specific Specifically, we'll explain the purpose of the employer ID number, describe basic record-keeping requirements for tax purposes, define basic bookkeeping and accounting methods, and explain the forms of business or business organizations, as well as some of the key factors for your growth and profit in your business. Before we begin, however, we want to remind you that you also need to understand your state and local reporting requirements, in addition to the federal requirements we will be describing here. Okay, now let's meet Mr. IRS.
The right to be informed, to quality service, to pay no more than the correct amount of tax, the right to challenge the IRS's position and be heard, to appeal an IRS decision in an independent forum, the right to finality, to privacy, to confidentiality, to retain representation, and the right to a fair and just tax system. These 10 rights make up the Taxpayer Bill of Rights. When it was adopted by the IRS in 2014, the Taxpayer Bill of Rights did not create new rights. The Internal Revenue Code, as well as other laws, regulations, and IRS administrative policies already contain many taxpayer rights and protection. However, because the tax code is so large and complex, many taxpayers are unaware of their rights. In fact, a 2012 survey by the Taxpayer Advocate Service revealed that only 46% of taxpayers believed they had any rights before the IRS, and only 11% of those actually knew what those rights were. The Taxpayer Bill of Rights makes it easier for taxpayers to understand their rights by taking the rights embedded in the tax code and grouping them into 10 broad categories. All IRS employees are responsible for knowing, observing, and protecting these rights. Congress recently added these 10 fundamental taxpayers' rights to the tax code and mandated that the IRS commissioner ensure that its employees are familiar with and act in accordance with these rights. For more information about taxpayers' rights, visit taxpayeradvocate.irs.gov.
Wow. So that was from 1986 to 2014. The IRS had the same kind of standards. And so they began to work on that in 2014. But in 2020, they passed a new law to put the taxpayer first. And so they say there's a new IRS in town. And so the new legislation that they voted on in 2020 is designed to automate many of the IRS's antiquated systems, and it promised to put the taxpayer first. Their goal was to have you, the taxpayer, experience great services and top-notch and excellence and impressive services. They want to say, I'm your comrade now. I'm no longer your enemy. For many years, we saw the IRS as our enemy. They also developed a new training strategy to try to improve the employee training such that it would deliver a better service to the taxpayer. And they also redesigned their strategy, putting efficient and effective tax administration and purpose in place. So in 2020, they also installed a new computer system, an updated computer system. So some things might be kind of jacked up for a little while as they continue to evolve into this new system, but they have a new computer system and everything to try to work better with the taxpayers. Okay, so enough about them. Let's talk about you. So you're either getting started or you're here because you're getting started or getting right. You decided you wanted to be an entrepreneur, to chase your dreams your way, to be the CEO of you. Congratulations. Let's talk about the different types of business structures. They are sole proprietorship, partnership, corporation, SCorp, limited liability company, and the new kid on the block, the sharing or gig economy. Now, they've sharing a gig economy has been around for a while, but it's been a lot of money slipping through the hands of the IRS from those little guys, and they became even more popular during the beginning of the pandemic. So they found a way to, excuse me, to to put a tighter rein on this. So you see here, a sole proprietorship is the simplest type of business. It's unincorporated, and one person owns it. So it doesn't exist apart from the owner. It is the owner. And but the owner has the ownership 100%, but it also has all of the risk of the business losses and the assets. You have to start at it with your own personal assets, your money. Even if you get a bank loan, you're responsible for it. So you're limited in your ability to get capital, to get funding from banks and stuff for the business, because it's all contingent upon you. As a sole proprietor, you would file your income taxes using a Schedule C. So that's on your regular 1040. If you have a job on the side that when receive W-2 income or wages, then that Schedule C gets attached to that tax return. And you pay taxes on the combined income of your wages. And your business income. If you have a loss, then that gets adjusted. The next type of entity we'll talk about is a partnership. And so a partnership is a relationship between two or more persons. Well, specifically, that means you can't be a single individual and be a partnership, because, even if you got a split personality, you're not two people. So anyway, that was foolishness on my part. But each person that's a part of the partnership contributes money, property, labor, and skills. And any number of people can join a partnership. The advantages being that it's easy to organize, and it's got a definite legal status, and it might have a greater financial strength than the sole proprietor. However, there are disadvantages. And the first disadvantage is that the decision authority is divided. And to me, it seems that's one of the biggest deterrents to a partnership. Some of the professional partnerships, like doctors and attorneys, where they share space and staff, those kinds of professionals seems to work better than people that come together maybe to open a beauty shop or some of the other types of entities, is because they can't always agree about how to run it. And that's unfortunate. Seems like you come together with a good idea, but when it comes to the day-to-day operations, everybody has their own opinion. The other disadvantage to a partnership is that the liability of the partners is unlimited, but you can be held responsible for the debts and liabilities of other members of the partnership. For example, if one partner doesn't exercise good judgment, that partner could cause not only the loss of the partnership's assets, but the loss of the other partner's personal assets. Partnerships report their profits and losses on Form 1065. The next entity type we'll look at is a corporation. What's a corporation? It has a life separate from its owners, and it has rights and duties of its own. Corporations generally have a board of directors, and the corporation should also conduct meetings with this board of directors on a regular basis and have minutes that are recorded from those meetings as a part of their records. That is a requirement. Some of the the owners of a corporation can be stockholders or shareholders, and one person can also be a sole shareholder or a corporation. So that's saying that one person can own a corporation, and still would require a board of directors. Managers of the corporation may or may not be shareholders. Forming a corporation involves transfer of money or property or both by the prospective shareholders in exchange for capital stock. So that's how money is raised, by selling stock, but everybody is responsible for that. The disadvantages of a corporation has to do with its taxability, in that the corporation is charged on the profit, as well as the dividends that are paid to the corporate shareholders. Then they have to pay the taxes on that. So it's like double taxation. They also can be more difficult and more expensive to organize than than other structures. Let's look at the SCorp. The SCorp is a small business whose shareholders elect to report their profits and loss in the same manner as that as a partnership or as a sole proprietorship. Unlike like partnerships, they do not pay tax on the business return. All of that gets passed through to the personal tax return of the members of the corporation. As corporation shareholders provide services to their corporations and are considered employees, and their compensation is subject to employment taxes, which means you would be getting a W-2. So that is a requirement of the S corporation. Should you elect to select that entity, you would have to become on payroll and receive wages, and the wages have to be reasonable for that type of job. So if you were the director of the company, it would be unreasonable to say that you only receive $5 a week as payroll or $500 a week, because directors, program directors generally make more money than that. By law, officers of corporations are employees for employment tax purposes, and their compensation is taxed as wages. I already talked about the fact that you need to pay reasonable compensation or wages to the shareholder employee in return for their services. And the employees provides the corporation before non-wage distributions that may be made to the shareholders. So in addition to wages, you can get distributions from the SCorp, which are not taxable at the same way as wages, but you have to get the wages first. So it's got combined advantages and the disadvantages of partnerships and regular corporations. And so they pay taxes on a form 1120S. The monies received by the shareholders are received on a K1 or, on a K1 or on a W-2. The next company we're going to look at is the limited liability company, and many people kind of reach for that. And an LLC is a legal entity created under the state law, and it's separate from its owners, who are referred to as members. They're popular because they are personally protected against the debts. Members are personally protected against the debts, and they have limited personal liability for the debts and actions of the LLC, and don't have many of the formalities of the corporation, like having a board and having to have all the standards with all of these meetings and keeping up with the minutes and those kinds of things. LLCs provide management flexibility and the benefit of flow through taxation. So generally on an LLC, you will probably have a managing member and then just regular members. And so, you would determine how you were going to set that up. An LLC may be treated as a sole proprietorship, a partnership, or a corporation. So, reasonably, if it's one person, it would be treated as a sole proprietorship, or if it's more than one, it could be a partnership or a corporation. So you, for tax purposes, need to tell the IRS how you want to be treated and your LLC for tax purposes. Do you want to be treated as a sole proprietorship, a partnership, or a corporation? And you have to make that election within the third month after you begin operations of your the tax year. You begin operations of your LLC. And so then the next one is the new baby on the block, the sharing or the gig economy. So if you earn incomes like a rideshare driver, a rental host, that's the Airbnbs, or if you're doing Uber, Lyft, or you're an online seller, those are all those businesses are part of the gig economy. That's also called the sharing economy or the access economy. And so people make their incomes here by providing on-demand work, and often they get their work from a digital platform. So let's take a deeper look at that.
Hi, I'm Rachel, and I work for the Internal Revenue Service. So, your sister turned her social media content into a paying gig.
creating social media sites for local businesses. Meanwhile, your best friends are using their cars for a few hours to pick up passengers and make some extra money. And your neighbor's kids are away at college, so they rent their spare rooms out to travelers. What do they all have in common? They're participating in the sharing economy, also called the gig, on-demand, or access economy. With the help of online platforms or mobile apps, people find short-term jobs covering a wide variety of skills, and more people use their cars and their spare time to pick up passengers or rent their spare rooms out. If you use your car or house through a mobile app or online platform, or you find jobs that way, you need to keep in mind the tax implications. The IRS has set up special information to help you navigate your tax responsibilities in these emerging areas. Keep in mind, if you receive income from a sharing economy activity, it's generally taxable. On the other hand, some of your business expenses may be deductible. So if you've joined the sharing economy, head over to the Sharing Economy Tax Center at irs.gov to see what tax issues may affect you. For instance, should you pay estimated taxes? Are you an employee or independent contractor? And what forms do you need to file? Know the tax rules so you're ready come tax time. Learn more at irs.gov/sharing economy.
Hey, so we as human beings have a birth, a name, and a number in that order. And so now that you have a business with a purpose, a business name, let's get that unique identifying number First thing we're going to do is register with the Secretary of State. So if your business will operate in a name other than your legal name, you must register with the Secretary of State. If you're going to operate, say my name is Ethelda Jones Hollis, if I'm just going to operate in Ethelda Jones Hollis, I would register with them and let them know, well, this is me operating this business. However, you definitely have to register with them if you're going to have a name other than your legal name, so that they'll know who owns that business. So first thing you want to do is verify that the name that you select is available. So if my name of my company is Complete Business Services LLC, ideally you would want to be sure that there's not another Complete Business Services LLC, because yours needs to be unique. And then you would also select the entity type. So that would be whether you're sole proprietorship, a partnership, an association, whatever. Complete the application and pay the applicable fee. These are the fees: $7 for the fictitious name. That's where I'd be saying, hey, I'm Ethelda Jones Hollis and I'm operating this business as Ethelda Jones Hollis. Then there's also $25 for nonprofits to register, $58 for the basic incorporation, and the LLC, the LP, the LLP, and the LLP, the fees for those are $105. So now you've got your name registered with the Secretary of State. Now it's time to apply to the IRS for your number. It's like your Social Security number. Your business has its own life. That's why it's called an entity. It stands on its own. So it also needs a number, just like you need a Social Security number to do business in life.
Here are a few tips for small businesses, trusts, estates, charities, and others about the Employer Identification Number, or EIN. The EIN serves as a tax ID number for businesses and organizations. First, only the IRS can issue an EIN, and it's a free service. Second, you can visit irs.gov/EIN, answer a few questions, and get your EIN immediately online. Third, know who will be the responsible party on the application. Generally, a responsible party is someone in control, and it must be an individual. You must provide the responsible party's social security number. Fourth, always keep your EIN information up to date. You need to report changes in responsible party to the IRS within 60 days using Form 8822B. Use the same form to report changes in address. Finally, your assigned EIN is yours for life. The number is never discontinued. If you close your business, write to the IRS to close your tax account. This is important and will help prevent identity theft. To learn more, visit irs.gov/EIN.
Now, that's very interesting in that they say that that number, that EIN is yours for life. So if you decide to start another business, it would also probably go up under that EIN. Just like if you, when you get married, your EIN, your social security number doesn't change. So while you're in business, if you have a business operation and the operation of that business changes, then you still keep the same federal ID number. So in addition to getting the federal ID number, you remember you also need to register with your local governmental agents and verify if additional licensure is required. I found it very interesting that if you are in the business of baking or sometimes making food products, if you create those food products, you're required by the city of St. Louis to get a manufacturing license. Now, who'd think that you would have to get a manufacturing license, but they say you are creating something. So whenever you're creating something from something else, that's called manufacturing. And so you're required to get licenses. And sure, I'm sure there are other things. If you have beauty salons, there are additional licensure requirements. So you want to make sure that you are set up to get all of that. And so you don't get blindsided and get closed down because you don't have the documents that you need. So now you're all set up. And so you're ready to get started and move into the next level. So you're going to take all your little registration documents. That would be your registration from the state, as well as your federal ID, your letter from the IRS. And when you filled out that for the EIN, if you do it online, the actual letter from the IRS comes up on your computer and you can print it. And then you have your document right there. You don't have to wait for them to mail it to you. And you can take a copy of it and put it on your phone so that you'll always have your federal ID number with you. The letter that you get from the state when you register with the Secretary of State, that gives you your charter number. And so you might also want to take a picture of that and have it on your phone so whenever you need it. But you take those documents and you go to the bank and you open a separate business account for your business income and expenses to come pass through. Why are you doing it? Because you cannot commingle funds. Do not commingle funds. Do not commingle funds. So what does that mean? That means that you don't do business transactions out of your personal bank account. So this is why it's one of the first things that you do, opening up a bank account for your business. Is one of the first things that you do once you get your numbers. And the business doesn't have to necessarily be a business account that has the name of the business on the account, but it should be a separate account where all income from your business passes through and passes out. Do not commingle funds. So some things to consider when you are making your banking considerations is you need to think carefully about what kind of services you need. There are some banks or commercial banks, and that sounds good because you say I'm in commerce, but in the beginning and even for some seasoned businesses, there might be some services that are more personalized services that you might like that business banks don't offer, as far as being able to get to them as you need them, to pass money from one account to another one, because you can still do that. You also want to check for transaction limits and fees, and you want to and fees are very important, because if you look at the fees that can be, say for instance, a bank has a monthly fee, either whether not dependent on what your bank balance is, but so that if they're taking $5 or $10 out of your account every month to operate your account, that's eating away at your profits. And so you also want to look at transaction fees. Some banks have transaction fees on what they call foreign accounts. Well, I did business with a bank that had that, and I thought, what the heck is foreign account? I'm not dealing with China or Germany or anything like that, but a foreign account is an account from another bank or another state. And so that's what they call foreign. And so you want to, if you have a lot of those transactions, those can eat your money up. So you might want to not, you might want to consider that in looking. And then another one is, do they pay interest on the cash inside your checking account? That can help. I mean, it's probably not much, but you're in business, and so you're supposed to make business and progressive kinds of thoughts. And if they have balance requirements, you might want to check that. Let's go back. Okay, and then another thing to consider is when choosing your bank is whether you want to have a physical footprint or whether it's an online only. And so if it doesn't matter, you don't need to go to the bank, then you can do the online thing. But if you want to be able to go and sit and talk to your banker because you might want to have get a loan or something, then that would, or just to get to know them and find out what kinds of services they can do. And sometimes they can help you make business decisions about progressing with your business, or give you some tools to help capture your income or expenses. So you want to choose a bank that has reasonable service fees. Select a bank that's easy to access, saying that if you want to be able to walk in and talk to your personal banker, that is the one. And you're living in St. Louis, Missouri, you would not get a bank in Kansas City, Missouri. That's that's like a 3.5 or 4 hour drive. So, I mean, just so that it makes sense. But you always should carry a ledger around to record your transactions on the fly. And that ledger can either be a notebook. Remember, you're a business person, and so you're going to think like a business person. So it can either be a notebook, it can be your iPad, it could also be your phone, and you could just talk those transactions into your phone. And later on in the presentation, I'll kind of give you a summation of what's a good way to keep up with your transactions. You want to record all banking transactions. That's ATM and your direct debits. Also, pay attention to your Cash App, your Venmo, your Zelle, those kinds of things, because one of the new things that the IRS is doing is that they're requiring all of those Cash App, PayPal, those kind, Venmo, those kinds of cash transfer tools to report the money that moves through there. So they're required to report that to the IRS. So if you had been possibly, and I'm not trying to say anybody was cheating, but if you possibly had been running your business with and having people pay with Cash App, et cetera, et cetera, et cetera, and being able to report what you wanted to report, well, now they are required to report that to the IRS. So you need to keep up with those transactions too. You also want to make sure you understand your bank statement and the things that are on it. You need to look at it. Many of us receive our bank statements digitally, but that doesn't mean you shouldn't look at them and understand what's on there. So, because it could be that somebody, you got charged twice for a transaction. So you want to pay attention to your money, reconcile or balance your bank statements every month, and immediately account for discrepancies. One of the things you would do with your bank statements, you would write the ending balance from the previous month, and then you would list all of your deposits that you had made during that current month or that bank statement period. And then that would equal your balance. And then you would subtract any expenditures that were not already included on the bank statement. So you would look for those. So if you had done something after the statement came out, you did it before the statement came out, but it hadn't cleared the bank wouldn't know about that, but you know about it. So subtract it so that your available cash will balance with what's really there. So now that you have those primary steps out the way, let's keep building your business. So we want to set up your business calendar. So that is a very important thing. The days, so you can list on there the days that you're open for business. Even if you don't have a brick and mortar, the days that you are actually, and the times that you actually have available to work in your business. Set up your business calendar. Be intentional about your business. You want to establish an operating budget for your business, especially if you're operating with your own capital. So if it's going to take probably a minute, even for the best businesses, for your business to really get in the black. So you want to make sure that you can afford $10,000 rent a month, if you're actually moving into a brick and mortar, or that you can afford after you get all of the to do the enhancements, to do the build outs and all of that stuff. And so establish an operating budget. So maybe you get a restaurant and you want to get a special piece of equipment. Well, if your budget says you're going to have to wait till next year, then you know that they won't allow for it this year and you can't get a loan for it. Then you have to make a decision on what type of equipment you're going to use until you can afford that you want. So as you begin to develop your brand, you're going to get some business contact cards, and then even set up social media if it's appropriate. So that might be, you might decide to do YouTube, you might decide to do some blogging. You definitely want to get a LinkedIn, you want to, and maybe set up a web address, so those are things, considerations, and some things it won't make sense to do that, but those that, consider that, to consider all of that. Use a car mileage tracking system with your business, so you can track your business miles and your personal miles, and it's imperative that you do both. Up until 2020, the federal government would allow you, you're supposed to keep up with that, but if you accidentally didn't, if you can show something that was reasonable, you could go back and reconstruct your miles. They would accept that in case you were audited, but now they have cracked down quite a bit on that, I understand. And you have to put your business purposes on, be able to show where it's written what your business purposes were for travel and for business meals. Okay. So we're talking about tracking and budgeting and operating expenses and all that stuff. So why don't we put up a system? Now, there are several different kinds of things you can do. You can have a little ledger where you write things down, and that can be tedious, or you can have an electronic system, and one might even be something like Excel. I have a client that has a very lucrative business. She's got like a $500,000 business, and she keeps all of her stuff on an Excel spreadsheet, but she checks it every day. So whatever you're going to use, make sure it's something that you will keep up with, that you'll be responsible for, that you will take the initiative to make it important enough for you to follow through. And then why would you not follow through on keeping up with your accountants, if being a business owner and a successful business owner is what's really important to you? The other option is to hire a bookkeeper, and that person would help you keep up with your receipts, your receivables, as well as your expenditures. So they would record that for you. So you can hire a bookkeeper that would be internal to your company, or you could hire one that is external. You could also hire an external accountant. They charge more than bookkeepers, but they help you with other decisions, such as when to make a move with this. So they help you with decisions other than just your day-to-day money transactions. For your accounting, financial accounting systems, mobility is the key for many small businesses, because you're always on the go and you're always working your dream and your vision. And so having the time to sit down at a computer like my $500,000 client does is sometimes both inconvenient and inefficient. Sometimes you just got to do it anyway. But if you can make it easier on yourself, the important thing is that you let your accounting be something that you will work with. You need to be able to manage your finances wherever you go. The problem with some of the mobile apps is that they don't have a lot of the functions that the business needs. They kind of operate on the bare minimum. So if you go cheap on what you buy, sometimes you get cheap. So you got to decide. But if you can only afford cheap over nothing. Okay. Now, one that is inexpensive, doesn't have a cost is Wave, and that's a cloud-based accounting software. It's easy to use, and it's got some time-saving features to help you manage your finances. It doesn't have all of the capabilities of a paid system, but it does have some core features that could help you initially get started. It offers unlimited everything. Okay. Sorry about that. It offers unlimited everything. That means you can use it for customers, invoices, expenses, and reports. And it's best for businesses that are just starting out or plan to remain small. I'll say that again. Wave Accounting is best for businesses that are just starting out, but more importantly, that plan to remain small. And that is some people, that's their vision. They want to do something beyond having a hobby, but they don't plan to grow to where it's going to take all their time. And so that's another thing as you're considering developing a business. If it's going to take all your time away from other things that truly matter, is it a good idea? Is it a good idea to be huge and unhappy, or to remain small and happy? Or maybe you don't mind, so you have to determine all those things for yourself. It's good for self-employed people such as entrepreneurs, freelancers, and consultants. One of the bad points, caveats of the Wave system is that you could quickly outgrow it. Now, just because a software goes mobile, it doesn't have to compromise the needs of the business. FreshBook is one that's very good, and so you can take a look at that one. Also, Mint, which is created by QuickBooks and offered by Intuit, is an exceptional personal service finance, and it's got many awards. It's easy to access on your smartphone or even your Apple Watch, and it's free. And so that's another consideration for you. I like QuickBooks. That's what I use. I'm a QuickBooks Pro advisor, and so I have customers who utilize QuickBooks, and I help them with that. QuickBooks has a desktop and an online presence, and I believe the online is excellent because you can work with it on your computer. Everything passes through. For instance, for my QuickBooks accounting clients, while they're traveling or whatever they're doing and entering things into their QuickBooks or taking pictures of their receipts to attach to bank transactions that come through, it operates in real time. And while they can see what they're doing, I can also see what they're doing because I'm their accountant. Okay. I am jumping ahead. Okay. QuickBooks offers the best and most affordable paid packages and services for different types of business. The cheapest plan they have is limited to one user only, but it's only $25 a month. I said when I originally did this, but last month or 2 months ago, that went up to $35 a month. So now you've decided on a computer system and not accounting system. So now you want to understand also within that accounting system, you want to look, whatever system you use, you want to understand the cash flows. Why? Because the cash flows, the way money moves through your business, is the heartbeat of your business. You need to know how money is moving, what you have available for cash to use. So you also want to know the difference between accounts payable and accounts receivable. So those are things that you can make sure that you understand. What's the accounts payable, the ones that where you owe people for some goods or services you receive, those are your liabilities. Accounts receivable are the monies that you have a right to collect because of goods or services or that you have given to a customer. Those are your assets. And for it, let's look at some of the basics. I think a good idea is to set up a pay schedule for when you're going to pay your bills. For instance, the 10th, that you say on the 10th, the 15th, and the 25th of the month, that's when I'm going to sit down and handle my accounts payable. And that way you're not picking up something every day. If you got something due on the 12th, then that would be included with your bills for the 10th. So you would have 3 stacks and stuff. So if you keep up with them that way, you're ahead of the game. So as invoices are received, either date stamp them or write the date on them that you received. If you have QuickBooks, you can go ahead and put those into QuickBooks as something that's payable. And you want to set them up according to the payment terms and dates, which means that, which is referring to the fact that some invoices sent from companies, if they're not saying cash, you have to pay cash upon receipt of the invoice, it might have a credit if you pay it in 10 days or 50 if you pay it by the 15th of the month. And so you want to look at those and try to make sure you take advantage of those credits, because every penny counts when you're in business. Your accounts receivable, regularly monitor those receivables so that you know who owes you money, and be realistic about whether or not you could collect them. Now, even if you're on a cash business, if you're a hairstylist, you can sit there and work on somebody's hair. If you haven't collected first, if they get up and leave the chair and don't pay you, then you still have a problem with collecting your receivables. So always when you're budgeting, allow for doubtful accounts, money that you may not get. And the longer you're in business, the longer you'll understand that. And so when I talked about looking at your receivables, that's when you're tracking the aging on them, when somebody, how long something has been outstanding, because after a period of days, it's going to be harder and harder to collect it. Once you get past 30 days, it's hard. Once you get past 60 days, it's even harder. And the older the account, the less chance you have sometimes of collecting that. So you want to track that. So when you can see that a certain customer might be really slow in paying, then it's up to you to make a decision. Do you want to still consider doing business with them, or do you want to find some other alternative, make them, like require them to pay ahead of the service, and tell them why, that you have to respect your business first. At some point, even though you might need to write off some stuff, or you provided a service or a product for someone and they didn't pay, and you have not been successful in collecting it, this here shows that 26% of invoices 3 months old are uncollectible. Those 70%, that's what I said, the longer they are being held, the more possibility that you will not collect it. 90% of invoices 12 months or old or older are uncollectible. So the best advice for you to make a decision, because you're going to make a determination what your write-offs policy is going to be, is to ask your accountant. And because this is such an important and valuable part of your business, you might, even if it's a friend, you might consider hiring a collections company to collect for you, because someone that stiffs you ain't really your friend, so you don't have to really worry about losing their friendship. And so there are things that you might do to follow the flow of feeling not bad about what you might have to do if you have to set up collection agencies. Make a phone call, make another 1 or 2, send a letter of demand, a final letter of demand, and then hand it over to the debt collector, and they'll take a percentage, but beat now. Well, that means some beat none. So your customer might ask if they can pay off the account over several weeks, a month. And if you want to do it, go ahead. But I recommend you add interest on for doing that, because you're not a bank. And so in addition to you having to wait for installment payments on money that's owed you, you're having to do the additional accounting. So it's taking your additional time from the time that you spent providing the service of the product. Like I said, hire it done if it's too much for you. So there is an accounting procedure schedule, and I'm not sure if you guys are going to get a copy of this document, but it will be on my website. This procedure schedule shows you daily activities that you should do for your accounting, monthly, quarterly, and annually. So it's a good tool to have. We're going to talk about, look at the estimated taxes now, because one of the reasons, after you have been very accountable and kept up with what your business is, income or profit or loss, if you're making a profit, you want to pay estimated taxes.
Taxes are a pay-as-you-go system. That means you pay your taxes as you earn income during the year. Either your employer withholds taxes from your pay, or you pay quarterly estimated taxes on your own. If you have income that's not subject to withholding, you may need to make quarterly payments. This includes income such as self-employment income, interest, dividends, prizes, and rental income. It may also include income earned from gig work or other activities where you are not an employee, such as money you earn as a for-hire driver, delivery person, or other service provider. Generally, this income is taxable even if you don't receive an income statement form such as a W-2 or 1099. So make sure you keep track of how much you earn. Go to irs.gov/payments to learn more about payment options. You can pay online, by phone, or with the IRS To Go mobile app. When you electronically file your tax return, you can schedule your estimated tax payments with an electronic funds withdrawal from your bank account. Other free electronic payment options include pay online from your bank account using IRS Direct Pay and the Electronic Federal Tax Payment System, or EFTPS. You must register to use this one. You can also use a debit, credit card, or digital wallet option, or pay with cash at one of over 26,000 participating retail stores nationwide. But know that the provider, not the IRS, charges fees for these choices. You may also choose to pay estimated tax payments in 4 equal quarterly payments using Form 1040-ES and mailing it with a check to the IRS. Here's the bottom line. If you expect to owe at least $1,000 in taxes, you may need to make estimated tax payments. And if you pay too little tax during the year, you may have to pay a penalty. So, if you have taxable income from any payer that doesn't withhold tax for you, check to see if you need to make estimated tax payments. Go to irs.gov/pay-as-you-go to learn if you need to set up quarterly estimated tax payments, or to see if you should increase your withholding if you have an employer.
Okay, well, hurry and get through this so we can have enough time for me to listen, look at least a couple of questions. So that's saying pay those estimated taxes, because the penalties can be very, very great for those. And so that's on top of giving extra money away. That's paying the stupid tax to pay the interest and penalties on underpayment. So now you've got your business going, you got your bank set up, you got your accounting set up, your business is growing, and you need to hire people. So then you end up having to pay payroll taxes, and if you have employees. And so these things are withheld from your employees' checks. I recommend that you utilize either a software or a payroll tax company like Paychecks or something like that, or even in QuickBooks. You can set it up in QuickBooks as well for your payroll. The payroll tax payment and reporting schedule is regulated by the amounts of tax payable. So the more, the greater the tax withholding, the more regular you have to report to the federal government. In addition to federal tax withholding, you pay Social Security tax, and that means you match part of the withholding for the employee. You pay that out of your pocket. There's Medicare taxes. There's also state tax withholding, city's tax withholding if you operate in the city, or if the person that's your employee lives in the city. Earnings, there's also a 1.5% tax that's called the city employment taxes that you pay if you're a city resident or your business is domiciled in the city. Okay, and so these are some of the forms that are needed if you have payroll. And so the biggest thing that I want to mention is, if you have a payroll, set up a separate account to hold your payroll taxes until they're due to be paid, because otherwise you can think that that's your money and it's not, especially if you withheld it from somebody's paycheck. That's not your money, that's their money. And so set up a separate account so that when it's time to pay those payroll taxes, it won't come at a point and you can't pay in the money that you collected from somebody else. That's illegal, and you can get in a lot of trouble for that. You want to file timely.
Here's an important filing deadline reminder. The law requires you to file a copy of the W-2 forms you give to your employees by January 31st. And you are also required to file the W-3 forms. Remember, you need to send these forms to the Social Security Administration.
In the essence of time, I'm not going to finish that video because I think this is important, that you, in considering payroll, you can hire your family, and there's an advantage of hiring your kids that are under 18 years of age, because you don't have to pay unemployment compensation for their wages or for their services. So sole proprietorships and husband and wife partnerships can save a significant amount of money by employing your family members, but they need to be doing something bona fide. It can't just be like their allowance. You need to give them something to do, and it also teaches them some skills for life. This particular the audit technique guide, if your tax accountant or your person that works with you doesn't know about this audit techniques guide, and ask them about it. If they don't know about it, then you might want to consider getting somebody else, because this particular thing tells, it's useful in that this is what the IRS agents use to audit you, and it also is a guideline for you knowing what information they might be looking for when you do your tax returns. Make sure you have a paper trail, keep up with everything, document and support, document and support, document and support. And so that ends my presentation. We only have 5 minutes for questions, so let me look up here and see. Somebody missed, okay, thank you. So if you expect to pay less than $1,000 taxes, should you pay it? Should you not pay? Rachel, that's kind of up to you. If you think that you can afford to pay it, they still are going to charge penalty and stuff, but they won't, or interest, but maybe they won't charge penalty for the underpayment. I've seen them being really tight lately. So I don't know. It's kind of up to you. I hope that answers your questions. Okay, I don't seem to see any more. Any more questions that I need to answer? Okay.
I have a question.
Yes, ma'am.
Considering it's the end of the year, where should, if someone's just starting out, what should they begin doing? Just kind of go through those things that you listed, or what would you recommend a business be doing right now toward the end of the year?
I would recommend that you take a really close look at your income and your expenses, to what you have spent money on or invested into your business, and take a close look at that and see if you made a profit, and start to do the accounting to see if you do need to pay that estimated taxes, because you do have until mid-January to send that money in. If you, so the estimated tax for the end of the year is payable to the IRS on January 15th. Also, you want to make sure that you have things in place for January, mid-January, when you can start to actually file your tax return. Also, something that's that I'm excited about is that people that pulled money out of their 401ks and their pension plans in 2020, you also, without having to pay the full taxes on them, especially if they were under 59 and a half, and they didn't have to pay that 10%. But this year they've got, they're doing the same thing for 2021. So if you have to pull something out of your 401k, this will be a good time to do it, but you will pay the taxes on it over a 3-year period of time. So you might look at that too, you know, because they might not have it available for 2022, but it is still available for 2021. Did that answer your question?
Yes, thank you.
Okay. I think that we're just about done. I really thank all of you for joining me.
I see one more question. Does that count for IRAs as well? And we'll make that the last question.
For IRAs, you can, you mean pulling the money out? If you mean pulling the money out of an IRA, yes. Let me look at that question in the chat. I closed. Yes, yes, Danny. If you have money in your IRA, so it's your 401k, your IRA, any of your pension plans like that, if you need to pull some money out of them, snatch it. Snatch it, and then know that you, but know that you're still going to pay taxes on it, but it'll be spread over a 3-year period of time. So let's say you pull out $10,000 and the tax on that ends up being $2,500. Then you would pay that tax on well, I shouldn't have said 10,000 because that's hard. Well, that's like 3,300 a year. Then you would pay the tax on that over a 3-year period of time. Hope that answers your question.
Well, Ms. Jones-Hollis, thank you so much for your presentation. Very informative as well as thorough. And we really appreciate you. St. Louis County Library has many resources and services to assist starting and managing small business or nonprofit owners. A library card is key. In your chat, you'll see a link if you'd like to sign up for a library card. Using that link, we will mail a card to you. Also, we have reference librarians available to be able to help you with research, navigating small business databases. And we do have e-courses on some of the programs that Ms. Jones-Hollis talked about. And also have a database to connect you with the Secretary of State. So we have a lot of resources that can help you. And then lastly, in the chat, there's also a link to a survey. If you remember to complete the survey today, you enter into a drawing for a chance to win a $15 Amazon gift card. Thank you all so much for joining today and for your participation in our Small Business and Nonprofit Expo. Everybody have a great afternoon and thanks again.
Thank you.